Hey guys, how's it going? We are back. We are back. We are back. This is a Thursday, the 16th, and super excited to see you guys. Super excited to be here. MC Fire here. Let's dive into some plays really quick. We want to get a nice, beautiful start on the market and kind of move forward through the day with clarity and see if we can learn something new. So let's dive right in. Yeah, so first live, I'm hoping it works pretty good, but we're about to find out pretty soon if it works pretty good. So off the rip, right? We have quite a few in plays. Not everything is that's on the board is necessarily worth the squeeze there. But the first thing I want to bring your attention to is the VIX. We're gonna go take a look at the fear indicator because the Fed has already put out the unemployment numbers, and we want to see how the market reacts to those unemployment numbers. So as you can see, not too much fear, just a slight bump in fear, but not too much. We knew they were going to come in worse according to the Fed's own estimate, but the really news for us isn't necessarily a catalyst or a reason to buy. News for us is more of seeing how the market reacts to new data, right? It's not a trigger, it's a setup, right? Seeing how the market reacts to new data and wait and see. So we can go over here to our handy dandy Forex Factory tool. And we're gonna zoom in there so you guys can see. Maybe we can center it. That'd be nice. Sweet. So this is Thursday, Jan 16, right? And you had your unemployment claims, which is denoted in red. They were estimated to, I mean, you can see the numbers here on the right hand side. Uh, I'll highlight it for you there so you can see it. But these numbers right here, unemployment did go up, so that's bad. We don't like to see people without a form of employment if they can all help it. And retail sales was down. Now, that was forecasted down, and the unemployment was forecasted up. So they're in line with what people's expectations are, and it doesn't make it any better. But the market, if you anticipated expectations, right? Um, if you're calibrating expectations properly, then I guess it's not that bad. And then that's kind of what the market is. That's kind of what the market is saying is that the expectations are calibrated. We should be fine, right? You also have the bar charts. We're gonna pull that up here. Uh, yeah, we're gonna get that going. So as you can see, I'll refresh the bar charts. I just want to make sure that they're good to go. Okay, cool. It should be good. Zoom in here for you guys. Yeah. Good. Shout out to you guys for sharing with me your comments and telling me kind of how how we can improve the channel for sure. So thank you, thank you, thank you, and thank you. I'm not sure why I did not update. It should have updated. Like this one allows me to update. This one doesn't. I'm gonna tell it to stop. It should have already updated. There we go. We want the most up to date data, right? Today's data. If at all we can help it, maybe get some pre market data in. But essentially, you just saw that the yesterday was a pretty good push for the Bulls. So the Bears kind of got swept a little bit, except for one sector. And on days like this, when things kind of pivot and the market kind of screams rally, 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 you want to see who didn't get the picture, who didn't get the memo, right? I'm pretty sure one thing stands out, right? I believe it's consumer staples here. Take it off and put it back on. Yep, consumer staples. So we'll bring consumer staples to the front of the classroom. We'll get rid of mostly everything except for consumer staples. Everything is pretty much screaming to the upside. And as I get rid of like things kind of at the bottom, we'll get rid of healthcare. We'll get rid of real estate, right? That one did not get the memo. So it's just something to know. Normally we do these looks at the end of the week, right on Sunday, we don't necessarily care to take a peek at rotation. You kind of want to give time for like a whole week. Now, also to bring to the front of the classroom, energy. Energy has been screaming to the upside, being the absolute laggard and kind of making huge inroads. We did profit off the XLE trade, which is the energy ETF trade. So reversion to the mean. Shout out to us there for that. Also, there was USO on the board. We were bringing that to the front of the classroom plenty of times for USO. But let's go look at consumer staples real quick because I want to bring to the front of the classroom consumer staples because um, you're gonna get a different look other than what everyone else is doing, kind of being a contrarian. So let's go look at consumer staples XLP. We'll bring in the grid, bring him to the front of the class here. And as you can see, even though there's considerable amount of buying consumer staples, you've got a lot of double red. Momentum and trend is what I'm referencing for the double red. Your momentum is red, your trend is red. And you can see that even if you didn't have the little tabs up here, you can see that with your moving average cloud. That's why I think it's pretty cool. The top one can be your your momentum, and if the overall trend is green, then you're good to go, right? That's just an easy way to kind of put it in perspective there, right? The bottom one is a 2150 and the top one is an 8 and 21. So they kind of overlap on the 21. I believe both of them are simple. Take a look at that. Or exponential, excuse me. That was exponential there and exponential there, right? So just keep it simple or keep it exponential, one way or the other. But if you can just find a way to just make it very simple for yourself, then good. Yeah, do that for sure. Do that, do that, do that, do that. But as you can see, while the market was screaming to the upside, this is where what the market decided to let go. So setups on this, even in an up or downtrend, could be pretty nasty, right? We have an alert here on Mo for it to like potentially bounce, but other than that, I would be looking for rallies into this sector or anything in this sector. You can look at Coca-Cola that's rallied into the moving average cloud. Maybe there's a setup there for potential downside move, right? So you're going to be shorting strength essentially. You also have a Target, same thing, kind of rallied and has started to pull below its previous weeks, previous days low, and it's kind of continuing to the downside. So we want to watch stuff like Coca-Cola and Target for potential plays, right? But keep bear in mind though that from a perspective of making higher highs and higher lows, Target's in an uptrend. It just had a pretty massive drop on the 18th of November. So just kind of keep that in mind. And then for Coca-Cola, it's been in a pretty sustained downtrend on the week, and it just kind of follow through with that. So, but it's entering resistance at 61.39. So just watch that. I like this layout because it gives you a kind of a beautiful snapshot of the market. So without further ado, we'll continue. We just wanted to bring those things to the front of the classroom just so you're tracking as a good day when everything's screaming up. Who's not rogering up at all? Okay. We also have let's do it like this. We have a couple plays that we have on, and then we're gonna bring a couple plays to the front of the classroom. So we're gonna go USO to start out, just to kind of show you guys energy has been screaming, kind of mentioned that earlier. We've been watching this one, the ascending triangle from a fundamental standpoint. Some people say those things are broken or they don't work. Well, I mean, you're seeing it once the ascending triangle kind of got going, major break. Ascending triangle combined with the squeeze kind of towards the end gives you a little bit of an edge. It is a setup though, right? You could trade this if it breaks outside of there at a narrow point, take the play up to the high, right? That could be a play. And then you have a runner up till, whatever you determine. So USO definitely in full effect. You can also look at XLE. We did take profits on XLE already. but a lot of continuation to the upside there. We sold at the first sign of danger. If XLE is a rotational play, you could say, okay, well, you could have rolled that. Yeah, you could have, but we don't have a crystal ball. So taking the high probability setup when you're trying to build a medium sized account into an extremely large account is still pretty good. We can, as you add more, you can throw more runners on kind of thing. But we just wanted to we're just trying to build, and some of the key factors, right? Definitely respect and support. We have our setup candle here, so there's that edge as well, and you have unbalanced volumes that was starting to trend up anyway. So to kind of to the point, when you have multiple edges in your favor, and then you've got also, in this regards, the fear of the play going against you, working in our favor, being that fear going against them, working in our favor, then there is, you can get some catalysts like this, right? And then, you just got some basic technicals. All those confluences coming together gives you a high probability setup right now. We still have contingencies for when our setups don't work. Obviously, risk management is your first and last stopgap. Do not put the money out in the market that you're not willing to lose, or if you do, you trade on tilt. So you trade with emotions, and you'll be your own worst enemy, and we don't want that. Okay. So let's kind of get into these plays here. It is currently 6:24, and we have plenty of time to look at some of the other plays. We're gonna go PCG with a buy bias. Right, we got PCG for a buy bias, as you can see already that that greed's kind of kicking in. So as it pretty much sold off pretty heavy to the downside, unbalanced volumes red, you know, it's really extended at a 3 ATR. Now, how you play this is it's a reversion to the mean. You're looking to see, well, there's a setup candle here. You could potentially take this play back down to the mean, which is the 8 period moving average, right? There it is. Up here, we kind of have it represented here, just kind of show you guys on the daily what that would kind of look like. But essentially, you're looking at the weekly at 1901, right? 1901 is kind of what you're looking at for reversion to the mean. Now, because things happen in real time, kind of go and split that in half. So the distance between where price is and where the moving average is, if you get this play for like 3 weeks, expect it to be like somewhere in the middle. So kind of target 1814 for moving forward. That's what I would guess. So 1687 to 1815, 1814 is kind of what you're looking at for that play. A couple of dollars, not too crazy. And if you get a full reversion to the 21 period moving average as your mean, do the same thing, right? The 1994 on the weekly right there, and then you can go halfway at 1879. That's about what you'll get for that. So key, yeah, but buy bias is definitely could be an effect here. It's already kind of kicking to the upside, I believe, this morning. So watch out for that. Buy bias there if you're taking the PCG. DJT. With the new administration coming in, we definitely don't want to throw out any catalyst plays. Already, DJT is breaking to the upside this morning. So yeah, I mean, definitely watch out for that. Now, how you play catalyst plays, I don't necessarily look for these for buying long-term holds, right? You could take the catalyst play. Actually, kind of the time to take the catalyst play was yesterday as it pulled back in the upper third of this push. So if it pulled back in the upper third, very strong catalyst to go ahead and take the play to the upside with the 3 ATR as potentially the takeoff. But you take the play, stop out no more than 2 bars, right? The 2 bar professional is really good for when you are running audibles, to still keep a good like quick way to think about, hey, how do I manage my risk? Well, 2 bars, 2 daily bars, 2 weekly bars, whatever your time frame that you're taking the play on. So, like, let's say, for example, the setup is on the weekly with catalyst, right? We have an uptrend. Really, we use a weekly chart to determine the trend. That's why it's so important. But really, the play is based off of a daily, right? So, if you're taking this play off the daily, the 2 bars would be a stop out of the low of these 2 bars, right? You're looking at 38.58 ish, 38.26, right? Something somewhere around there, 38.26. And then you're looking to take it off at like 51. Now, I've heard problems. There's been problems with liquidity in DJT, so just keep that in mind and bear act accordingly. Like you won't be able to get filled at the level you want when stuff like that happens, and that's kind of the biggest issue. So just kind of watch out for that. Now, the plays that are in our wheelhouse, like once you kind of narrow down your confluences, you kind of get everything set up. You notice there's not a lot that's necessarily you don't have to be tracking the whole market. You just have to track what's relevant to your setup, and it weeds kind of weed a lot of these tickers weed themselves out. Let the market tell you what's in play. You don't impose your will on the market, right? The market talks. You just got to listen. Um, SPGI is right here. Potential setup to the downside, as you can see, on the daily, on the weekly, making lower highs, right? But consistent lows. So I'll mark that out for you guys here, those levels there. So you guys can see what I'm seeing, right? So boom, there's this. We'll put the alert here, right? It went through that. We'll respect this one, right? Boom. So there's your base right there. And if the going from the highs going on down, you're getting a potential capitulation, right? It's already respected the 21 and the 8 period moving average, really respecting the 21 period moving average to the downside. So as market opens up here, we're looking for a break. If it can break below 48.70, right? ADP is above our level. So yeah, we're gonna head close that guy out too. Um, and let's go look at VT. So we're gonna go look at VT here. Just kind of going through, no rush. We can always go back and look at the market watch and see what triggered on the day. So the only thing that triggered is APD, and we'll take a look at that here in about two shakes of a lamb's tail. But yeah, as the market's kind of screaming upside, we'll see what's going on. ETN also to the upside. Okay, nice. So VT, looking forward to if we're going to get a play, it's going to be capitulation to the downside. Not too much really there. You're getting the early trend cross. Keep in mind though that the 21 period moving average is moving up. The unbalanced volume, the indicator on the left side of the chart at the bottom, is also moving up, and you get a setup candle wash on the daily. So definitely could just be a deep pullback, and the moving average just kind of got tight. You could kind of see something similar here, but the moving averages didn't get that tight, right? Whereas here, they definitely are getting a lot tighter. So something to keep in mind. In GE, let's take a look at GE here. So GE, very similar story, right? You got confluences kind of in the opposite direction. Unbalanced volume to the upside, 21 period moving average to the upside, although the 8 is below it, and you get a deep pullback where you're getting set up candles getting washed. So this definitely could just scream to the upside. You're about to get a moving average cross here on the weekly as well. So I would definitely we were looking for this play potentially to the downside. That's not necessarily off the table, because unless it breaks 180, really 178.82 to the downside, not really looking forward for that. We'll keep it on the board, but right as it stands right now, definitely not valid. Okay, let's go look at the market watch. We did get a potential stop out here for ADP. You also have Lily and something else triggered. I think it was ETN. I don't know why it's not on our alerts there. It probably is somewhere. We just gotta scroll for it. So we need another downplay here. Yeah, we need another downplay. So ETN, not looking too bad. Kind of building some, or it's got a squeeze going on. That's kind of that's what we're looking at here. We'll zoom in, but you got this squeeze, and then you've got it popping over the this candle right here on the 4th. popping that high, that's kind of where we put the alert. If it washes it to the upside, you got to squeeze. Moving averages are stacked positive, they're tight. It's been a sustained uptrend. Nice pullback. A lot of orders built in this area. So if we can continue to get above there, we'll put the alert again because it popped up there, but then started pulling back. We might be able to take this play if it actually makes a real break. We do get a lot of peekaboos. So, and kind of perched on its 200 period moving average. If you see the alert here, it has I believe the 200 resting there. So if it's reacting to the 200, very powerful, very bullish for tight period moving averages as long with the 200. We could throw that on there if we want, just to kind of see that take shape, right? So we'll throw moving average cloud on there, and instead of the 50, we'll put the 200, right? And then we'll tell it to show. See what it does. Apply. So let's see how 200. Yeah, so respecting the 200 over here, broke through it there, but respecting the 200 there, respecting the 200 there, respecting the 200. So it does respect the 200 on average. We'll zoom in here. Got close to it, kind of respecting it. So be something to watch there. Now it could be something that we take. We'll sit here and see if it'll actually work out in our favor there. CMG. Let's go look at CMG as well while we're waiting. I got the alert out there. Chipotle Mexican Grill. Chipotle Mexican Grill is looking a little better. I like that. So Chipotle Mexican Grill, fundamentals are actually pretty good, and it's a great place to eat if you haven't already. Now, how do I pick which one? Do it like Eaton or Chipotle Mexican Grill, stuff like that, right? It just kind of depends on what you prioritize. You're really supposed to prioritize very strong uptrends and like if you're above a lot of support. So in this instance, on the daily, right? If you're looking at the daily, you're below your um you're below your daily 21, right? So you're below your daily 21, you're resting at your 200 period moving average. That's good for a bounce, but you're below your daily 21. Where if we go back and it just triggered to ETN, right? You're looking at it above its 21, above its 8 period moving average, and set up candles to the upside. So this is kind of how we prioritize that. Also on the weekly, it's above its 8 period moving average on the weekly. So little better. We'll kind of go over here and throw a setup here. So we got ETN here. What we'll do is we need to go ahead and switch. We need to switch this out, right? And then we will go. We're looking for calls potentially for ECN. You can take this buy, which is your 50, and then you've got your 16. We probably need this one here on the sell. We're making a nice juicy vertical here, and we'll go ahead and exercise that moving forward. So we got it for 36 days out, 21 Feb, and then boom. See if we get filled there. I just kept it mid. We'll see if we get filled. Maybe some pullback action. I don't like to chase too much. I like to get a good order fill. A lot of times it'll fluctuate and come pull back to view up. We'll see if it does that. I think I got a message here. We'll see. Maybe it's important. Maybe it's important. Oh, okay. They want me to forward something. But essentially, yeah, if we can get a pullback here, we'll be Enzo. I think we just got filled, so we'll go ahead and put our arrow there. And so, as you guys kind of already know, if we're in, what's the first thing we've got to do? We got to start setting our risk, make sure we got our alerts set up, potentially for the play, right? We need to be able to identify, well, what is my what is my stop loss? Oh, sorry. I don't know why there's so much lag here. Maybe it's because we're streaming. But two bar professional really we'll remove the moving average cloud now. We don't need it. Right. Two bar professional here. We want to respect all of our buyers, but really our buyers kind of kicked in at around this area. So if we can, if there's a breakdown below that, then we want to definitely just let it go. Uh, the people that are offsides, they're definitely offsides, and the candle that really is in play there. If you wanted to give it a little extra, let's go back. If you want, I'm gonna zoom in so I can show you what I'm talking about. The setup is off this candle. These are the guys that are off sides on the 14th. So it broke above that yesterday, and now they broke it above it again today. That's really the play. These guys. So if you want to be a two bar professional, one stop out at the low or stop out down here. I'm more prone to kind of give it some leg room. So we'll do this to give it some wiggle room. Um, to really just say, yeah, you're definitely wrong. I'm definitely stopping you out here. It's unfortunate though because it's right there at the 200. So I definitely want to give it a lot more space to down to the 200, and we'll worry about the rest later. Okay, but yeah, we're also going to take a look at the cues there and the SPY. Just kind of give you guys a reference, and then we'll wrap up here. So cues pushing more to the upside today, which is good for us. I believe it'll probably go neutral here. I don't think that it will. I don't think that the Qs will do a whole lot of pushing today. It is above a good resistance level at 515. So 515.83 ish, that level, it is above that. So it respected it in after hours slash pre market, that level, and it pushed above. So that is very strong news for the Qs there. Right. If the cues are moving like that, then SPY is probably also moving like that. We'll go look at our canary in the coal mine after we look at SPY. So yeah, SPY got that trend line there that we just it just shows kind of their selling pressure. And if we get some selling pressure here, um, it might not bode too well for the overall market. Remember, we've got the SPY in combination with the canary in the coal mine, which is IWM. So SPY really needs to kind of push above this rotational zone, uh, 592 to the six, like I believe 601. Yeah, $600 and 48 cents. That rotational zone right there, would love to see it push above that. Uh, that's ideal. If it doesn't, just the fact that it again, same thing as the Qs, it pushed above this rotational zone at 591, 592, tested it pre-market, and then it's still above it. So it hasn't failed quite yet, but watch for puts below that level at 591. If you're day trading, watch for puts below that level. A break retest is definitely in effect there for puts for sure. Okay. And then let's go look at the canary in the coal mine, IWM. So we've been talking about IWM considerably. This testing of this gargantuan level of 226.62, multiple tests, multiple retests, no real breaks other than that one major neckline or head break in the head and shoulders there. We'll show you that. So yeah, up here, through here it broke and then broke below and has not been able to get above that. So all through here hasn't been able to get above, broke below, and then now currently, while the rest of the market's pushing to the upside, this is kind of having a really hard time breaking. If you can break, then another sign that I would say clear water, just multiple confluences that these things are moving forward for us to say, okay, business can continue as usual. We're going to see, be able to buy the pullback, stuff like that. I don't believe we are out of hot water quite yet. IWM, the Russell 2000, has not necessarily just made dramatic upticks. So we got to watch stuff like that. Okay. But I appreciate you guys joining us. This is super fun. We love tapping in with you guys. We love tapping in with the market. I'm telling you, I'll be up all night looking at the charts. I freaking love it. I don't know if some people like don't like looking at charts. I love looking at charts. It's just a matter of, do you have time to look at charts all day? Most people do not have time to look at charts all day. We had a really good week where we could kind of work from home and then look at the charts before we go to work. So that's the beautiful thing about living on the West Coast. You get to look at charts all day and then go to work all day, right? That's beautiful, really, really beautiful. But guys, I appreciate your time and expertise. This is MC Fire. We appreciate you guys tapping in with you. Give me a like, comment, subscribe for the first one, and then tap into some of the previous ones. They weren't live, but you guys got to see this one live. So have a good day and goodbye.